I did a couple of podcasts last year, so some of you might have already heard a little bit of my spiel, but I am primarily a private investor, and I also manage a little bit of money for some family clients. I'm not really an investment manager in a professional sense, but I used to also be an analyst at a hedge fund, and I've been doing private investing for about 4 or 5 years now, full time. My strategy is probably not terribly different from a bunch of the people you've heard speak already today. I think one thing that makes me a little bit different is that I really am pretty rigorous about profitability for companies. So I really focus on microcaps that are currently profitable, and that's a pretty narrow screen. So it really, for me, comes down to wanting to invest in companies that have proven business models. And it's really hard to have a profitable company without having a functioning business model. So you can always find companies that are pre-revenue or pre-profitability that might have good unit economics at scale. It's just hard to make those decisions and figure that out early in a company's life cycle. And then as far as some other differences from what I do, I probably go towards more industries that other people have avoided. I have done things in commodities. I've owned some oil and gas. I've owned some gold and other mining companies in the past. And for me, it doesn't really come to it's not really coming from wanting to speculate on commodity prices, but just recognizing that all businesses have inputs and risks, and those are just a little bit different and more magnified when you're dealing with commodity companies. So it's something that I've gotten some familiarity with and comfort with. If you follow me on Twitter, at Otter Market on Twitter or on MicroCapClub, I've discussed some of those kind of companies in the past. Lastly, I'm really not afraid of illiquidity. So I have sometimes invested in very, very small, very liquid companies, order of $10 million market cap kind of companies. And I'm not afraid of building a fairly large stake in some of those companies, even if it might not be possible to exit and to change my mind quickly. So you just have to accept that if you're right or wrong, you're most likely going to deal with the consequences financially of being right or wrong, and not having the ability to change your mind so easily. So with all that being said, I will jump right into my presentation. Can everybody see this presentation?
Yeah, it looks good.
Okay, cool. So if you're hoping for a really high quality business, feel free to jump off this call. This is a decent business, Supremex, and it's a company that primarily manufactures envelopes. So, strap in. It's going to be an exciting presentation for everybody. I can't wait to talk about this company. Quickly, a disclaimer, and this is true for everyone who's been presenting, I'm assuming, but this is not investment advice, and please do your own due diligence. I may have made mistakes in the process of making this presentation. Quick intro. So Supremex, it's a Canadian company, trades in Canada, and it is the dominant manufacturer of envelopes in Canada. It also manufactures and distributes its envelopes in the US, and in recent years, it has been expanding into packaging in Canada. So it's old school company, owns factories or leases factories, and makes products that everybody needs, and makes a good profit along the way. So kind of to whet your appetite for this, why should you be paying attention to this kind of boring sounding company? First off, it's pretty cheap. So you look at their EBITDA numbers, historical enterprise value to EBITDA, it's around the 4 times, trailing probably a little lower than that on a go-forward basis. So this thing is, pretty inexpensive. There's not too much maintenance capex, so there's quite a bit of free cash flow coming off of it. And relative to its historical valuation, it's also, at a pretty low price. So, this is a reason to pay a little bit of attention and try to figure out if we think this is a decent business to own. And why else it might be interesting to look at it right now. I'll forgive you if you might have missed this major macro trend, but envelope prices have been going up. And this is probably not something people have paid attention to, partly because Supremex is the only publicly traded envelope manufacturer that I'm aware of. And if you look at some of the data provided by this is the Fed data on pricing for categories of paper, the entire paper industry has been experiencing supply chain issues and stresses, and the envelope market specifically has been getting much tighter, and envelope prices have been going up quite a bit even in the last few months. So what is that really being caused by? The company attributes this to actual tightness in the supply-demand balance in envelopes. So you have a business that's historically been relatively, flat to down. It's been shrinking over the last, many years. So there's been consolidation, and some of the competitors have either exited the market or been acquired or taken some capacity offline over time. And as a result, the whole market's gotten pretty tight as demand has kind of recovered a bit from COVID. These are some headlines on the bottom side of the slide of some articles about this envelope crisis. So as you may imagine, envelopes are really not a big input cost when you're dealing with sending mail, but you really need to get them. And so when you need your envelopes, you're going to pay up a little bit if they're in tight supply at the moment. So just by way of furthering that point, one question people might have reasonably is this supply chain tightness just in the whole paper industry? And so is this company actually able to capture any of the margins of that tightness? And the answer, I believe, is yes. And you can see from their recent results, their pricing has been up substantially. It's up over 20% year over year. Their volume is also up, and I'll get into that a little bit over the next couple of slides. But clearly, this is a tightness in the overall envelope market, not simply the paper industry as a whole. And the company's been able to capture increased unit economics from this trend. So the overall market, as I've mentioned, it's, as you probably all intuitively aware, envelopes are not a growing market. And if you look at some relevant statistics, this is a chart that the company provides of transactional mail volume in Canada, sort of a proxy for envelope volumes. They've declined at around 6% annually. The US hasn't declined quite that quickly, but either way, it's a declining industry. The key point, I think, is that it's not falling off a cliff. You also can see on this chart, there's been a little bit of a reduction of that decline rate coming out of COVID as some of the demand has bounced back from these industries for sending transactional mail. But, this is a market that's sort of a predictable slow decline. The company has talked about some of the things that they've done to mitigate the effect on Supremex itself. And as a result, the company is really not even declining, quite at this rate. So what has the company been doing in this stagnant, declining market? Well, one of the things that they've done effectively is that they've expanded from their core base of operations in Canada into the US. So they have these facilities manufacturing their products in Canada. For those of you who know Canada, almost all the population of Canada is quite close to the southern border against the US. So a lot of these facilities are also very close to parts of the northern United States. So what the company has done is they've done a few strategic acquisitions, but also they've been able to acquire and grow their customer base in the US. And so when they've had shrinking volumes in Canada, because they are the dominant player in Canada with an 85% estimated market share, they're able to use some of that excess capacity as it is freed up into the US market, which they're very small, relatively speaking. They only have around 5% market share. I really attribute this to good blocking and tackling. This is just simply good execution by the management team, I believe. As competitors have been a little bit cautious and gotten out of parts of the market, partly because of COVID. These guys have come in and just done a good job and taken some share in the US, which I think they hope to continue. So another question that I had, which a lot of other people probably would have, is, why is this a decent business? I mean, it sounds very commoditized. It sounds like you should earn really, low returns on your capital. I think a slightly differentiated way of looking at this, which the management team sort of refers to in their presentation, is that this is a regional business. So some investors might be familiar with industries that are known to have really good regional economics because they're truly regional, small industries that you can only have a few competitors in any region. Things like cement, gravel, construction aggregates. So these are industries that might not have too much organic growth, but when you're well established in a certain territory, you can get good economics. And the reason for that is generally because of shipping costs. So anything that's heavy relative to its value, that's going to be a product that has a limited radius of economic delivery. Envelopes are very much in that category. So the company estimates that the effective economic range for their envelopes is roughly at 800 kilometers. So that trend is also probably magnified by higher transportation costs, higher fuel prices, trucking costs are up. And as the markets for these products might shrink and consolidate, also there are fewer competitors in any given region, so it naturally enhances some of those unit economics. To visualize that, this is my rough stab at drawing 800-kilometer circles around these individual manufacturing bases that Supremex has. And you can see they really have very good coverage in Canada and in parts of the northeastern U.S. But it really gives you a sense that they're not going after every customer across North America at this point. They're really they're making money in these core regions where they are they have very good market share. And what are they doing with all the profit that they're making from this decent business? Well, the management team over the last many years at this point now, since around 2015, 2016 or so, they've been buying up some facilities in the packaging space. So things that think about containers for food or beverages, for pharmaceutical products, cartons and boxes. And this is a growing e-commerce related market where the long-term economics might be very good. We don't have the exact figures on the prices on the earnings multiples they pay for these acquisitions, but I've done some back of the envelope math. Feel free to do some of your own math around it as well. But I think historically they might have been paying order of 4 or 5 times EBITDA. It looks like they've spent a little over $40 million to buy up almost all of this business that they now have. And it's on an EBITDA run rate of around $15 million annually right now. So it gives you a sense that it's really not wasteful spending into this new business segment. They've also really focused on a core region of buying up these facilities in Quebec. So it looks like they're taking a sort of measured approach to focus on building a platform that has a good business economics in a certain region before they're going to go out and, they're not buying plants all over the place willy-nilly. And on the shareholder side, so, who's holding the reins of this thing? There's a really strong, large shareholder involved here. It's a trust related to the estate of Jerry Zucker, who you might have come across if you look at some small cap Canadian companies, but Jerry Zucker was a businessman and investor. His estate owns around 23% of the company, and it's also a large, over 10% shareholder in a few of these other companies, which I've provided some of those logos below. I've actually had some personal interaction with these guys back when I invested in a little company called Circa Enterprises, and I had some good, I got a good vibe from some of their people. I felt like they were managing companies, conservatively, looking for profitability, looking for return on capital. And I think overall it's probably, a good cornerstone shareholder. And the chairman of Supremex is also one of their guys. Lastly, I will point out there was some interesting news early this year. There was a private investor in Canada who disclosed over a 10% stake in the company and pointed out in some public filings that he estimates the company has over $60 million of real estate value in 2 of their facilities, which are owned, and suggested actually in a shareholder proposal at the annual meeting that the company do sale leasebacks for those facilities to free up some cash. And by way of reference, this is over 30% of their enterprise value. Those proposals were not passed by shareholders. However, it's still interesting to think of this as a potential support to the overvaluation and helping to establish a valuation floor and some reduced risk in the overall investment proposition. So I think that's all I've got. Try to keep it short and sweet. If there are any questions, I will say also I've tried to reach out to management. I sent emails and reached out to the CFO. I have not heard any response, so I might not have answers to the questions, but feel free if there's anything here.